All right, we'll now move on to the third problem. The company has obtained an institutional term loan of 580 lakhs for modernization and renovation of its plant and machinery. Plant and machinery acquired under the modernization scheme and installation completed on 31st March X2, which amounts to 406 lakhs. 58 lakhs has been advanced to suppliers for additional assets, and the balance loan of 116 lakhs has been utilized for working capital purposes. The accountant is on a dilemma as to how to account for the total interest of 52.2 lakhs incurred during X1, X2 on the entire institutional term loan of 580 lakhs. So you have actually raised an institutional term loan of 580 lakhs. Interest payable is 52.2. So the accountant is in a dilemma how to account for that 52.2. So using that 580 lakhs, what you have done? You have actually acquired some plant and machinery, which is for the purpose of modernization and renovation, which you have done. And then you have made some advance to suppliers for some additional assets. And then third is working capital purposes. One thing is pretty clear. The 116 lakhs used for working capital, that is non-qualifying asset. It's pretty straightforward. But what about the plant and machinery acquired as well as the advance given to suppliers? Now, there are two ways of looking at this. This is not the construction of a plant and machinery. It's just modernization and renovation, which means you already have a plant and machinery. You're going to renovate. You're going to make some alterations to that. So do you think that it's going to take substantial period of time? We don't know. That is not given to us in the problem. So there are two approaches in this problem. Either you can make an assumption that the plant and machinery acquired for the modernization and the renovation, right, that is going to take substantial period of time, and we will take it as a qualifying asset. Similarly, the advance paid to suppliers for those additional assets, even that will take a substantial period of time. So we will take that as qualifying asset. Of course, the working capital will be non-qualifying. This is one stand. The second assumption is the plant and machinery acquired as well as the advance paid to suppliers for the additional assets. It's not going to result in a substantial period of time. So we can classify everything as non-qualifying assets. If that be the case, the entire 52.2 lakhs will be debited to P&L. So you need to discuss both the assumptions, both the approaches, right? And then you need to conclude. Okay. Now, if we go to the problem or the solution, let's see how the solution looks like. Now, please look at the solution part here. It says the first para is easy. As per AS 616, borrowing costs that are directly attributable to the acquisition, construction, production of a qualifying asset should be capitalized as part of the cost of the asset. Other borrowing costs should be recognized as an expense in the period in which they are incurred. Qualifying asset is an asset that necessarily takes substantial period of time to get ready for its intended use or sale. This is where the confusion arises. Because this is not the erection of a new plant or machinery. You already have a plant or machinery in place. You're just going to modernize it and renovate it. Is it going to take a substantial period of time? That's a question. So what is the treatment for the total interest of 52.2 lakhs? So if we go by assumption number one, that the modernization and renovation is going to take a substantial period of time, then you can take it as a qualifying asset. So if that be the case, the 406 lakhs spent on the modernization and renovation, as well as the 58 lakhs, which is the advance given to suppliers, we can consider that as a qualifying asset. Right? So this is a qualifying asset. If that be the case, this 36.54 plus 5.22, how did you arrive at that? 52.2 is the total interest into 406 by 580. 580 is the total institutional term loan. So out of 580, 406 has been spent on the modernization and renovation. So that proportion, so 52.2 into 406 by 580, that will give you 36.54. Second, 10% of that, 58 by 580 into 52.2, which is 5.22. So you can consider these two as 41.76. That's the total interest to be capitalized. Obviously, the interest on the working loan, which is 116, right? 116 by 580 into 52.2, which is 10.44, we can take it to the P&L account. This is one part of the story. On the other hand, if we take a stand that no, everything is non-qualifying, the entire 52.2 lakhs will be debited to P&L account, and that is exactly what you can see in the you see the asterisk there. This is where they are trying to explain their assumptions part. A substantial period of time primarily depends on the facts and circumstances of each case. However, ordinarily, a period of 12 months is considered a substantial period of time unless a shorter or a longer period can be justified on the basis of the facts and circumstances of the case. It is assumed in the above solution that the modernization and renovation of plant and machinery will take substantial period of time, which is more than 12 months. Regarding the purchase of additional assets, the nature of the additional assets has also been taken as qualifying assets. Alternatively, that's the second assumption. The plant and machinery and the additional assets may be assumed to be non-qualifying assets on the basis that the renovation and installation of the additional assets will not take substantial period of time. In that case, the entire amount of 52.2 lakhs will be recognized as an expenditure in the P&L account. This is important. The entire expense of 52.1 will be recognized as an expense in the P&L account for the year ended 31st March X2. This is the second assumption. Okay. So you need to articulate both the assumptions and then you need to write the answer in that sequence. Okay. Hope it's clear.